Good morning, everybody. This is Patrick MontesDeOca once again with the live trading room for the Equity Management Academy. I want to be able to take a couple of minutes here and do a special update report on the gold and the silver market and take a look at basically what's happened here or what is currently happening. If we take a look at the report that we published on the 11th, based on the closings of 11/28, if you click on updates on the website, you click on my name, it would take you to all the reports that were published this weekend. And in taking a look at some of the developments that took place this weekend, I want to just review a couple of them and see what basically transpired. But we had a lot of activity based on the expected decision of the Swiss government regarding the referendum for the gold initiative, and I believe that this had something to do with the sell-off that we saw on Friday. And according to the results, the polls on Sunday, the Swiss voters overwhelmingly rejected the proposal on Sunday to boost the gold reserves and impose strict new curbs on immigration. 78% voted no. And so I think that obviously somebody expected or knew about the decision of the referendum and came in and aggressively positioned themselves on Friday in this market, which might, in my opinion, be part of the reason why this market came down so much on Friday. But the fundamentals here is basically not only to do with the gold market. They have a real problem regarding interest rates, just like everybody else in the world, in terms of competing against this disparity now that we have, that has been caused primarily by Japan increasing substantially their quantitative easing or stimulus program to unprecedented levels. And obviously recently Draghi commented that they will do whatever it takes to stimulate their economy to the point that they're discussing or contemplating once again a stimulus package that will leverage the economy about 15-1. So I think that the market today is confirming what basically it's telling you, that regarding the Swiss vote, that it really doesn't matter what, whether they decided or not. What really in my mind is beginning to take a hold of this fundamental or this underlying market is the fact that we are moving into an aggressive stimulus globally once again. And it may very well include the U.S. In my opinion, I believe that there'll be no other choice for the U.S. to follow, as it is pretty much impossible for the U.S. economy or for the dollar to be an island in itself, while the rest of the world is collapsing. The intermarket relationship is going to put on so much pressure on fiat currency that I believe the shift in the paradigm that I'm looking for will take place at that point, when the realization of the sentiment globally is that there is another currency besides fiat currency that's been around for thousands of years, and that is silver and gold. We're looking at this market here in trading gold and silver as a currency, not as a commodity. The fundamentals are so extremely bullish that the price, I believe, is in the process of completing what could be one of the most explosive moves in the history of these markets. The economy is imploding globally, and the fear is that if it continues to implode, or if crude oil continues basically to decline, that we could be moving into some kind of a deflationary fear, panic, as we did just before 2008, before the Great Recession came in 2008, where the prices basically of crude oil and everything else collapsed, including mortgage rates. And as a consequence, obviously, we started this tremendous amount of money printing. But this was one of the fundamental news that we had to deal with over the weekend. And another one that was contrary to basically what happened on Friday in terms of price was the fact that India eases the gold import rule in a surprise move. India basically has scrapped a rule mandating traders to export about 20% of all imported gold into the country, in a surprise move that could cut smuggling and raise legal shipments into the world's second biggest consumer of the metals after China. So this was an unexpected decision by the Indian government, as most of the market had, I believe, discounted that they weren't going to lift the import quota. But this is a very bullish development, as it allows basically the trade of gold to begin a little more actively in a country that traditionally buys gold as a tradition to buy and hold throughout generations. And so this, I believe, will bring back the kind of demand that is being shown in China, as well as Russia, where they are buying tremendous amounts of gold. We are looking at an instrument that we've been trading that I want to just review, which is the JNUG, J-N-U-G, the a gold miner ETF. And there was an article here that was posted on Barron's magazine on Friday that kind of reviews what happened on Friday, that the gold miners suffered the biggest one-day loss in over a year. And one of the things that basically is catching my attention here is the fact that JNUG is going to announce a reverse stock split because the price is too low. And I believe as of December 23rd, they're going to basically split the stock for JNUG at 10-1, I believe. And in practice, the price will go up, but the number of shares and value that you have will stay the same. It's just that the price, obviously, they're finding is tremendously undervalued, and therefore, they want to split the stock and increase the price. So it's an indication of the changes that are occurring, which are being forced, you might say, or created by this tremendous decline that we've seen in the metals, or the attack that we have seen in the price of precious metals in the paper market. Now, this was the news, which is old news over the weekend. And you want to take into consideration some of these developments that we have on JNUG, and basically act accordingly as we move into the period of the application of this rule. And in the meantime, what we're looking at, if we take a look at the market, for example, in gold, on Friday it suffered one of the biggest days losses in many years, and then today this is one of the biggest gainers back to back after a major loss. And so what we're looking at here is major buying coming into this market on any correction, and we have seen that happen here since the low was made of 1130 on November 7th, the low of 1146 on November 14th, and now basically on December the 1st, we have experienced a low of 1141.70, not breaking the previous low, but basically coming down into this major area of support that the VC price momentum indicator is identifying as the buy 1 level to be at 1160 and the buy 2 level to be at 1145. Both of these levels have been activated with the profit objective of 1175 as level 1 target has been activated. Second level of sell 1 level of 1194 has been activated, and the market seems to be approaching the third level of 1213 as the third target, fourth target. Now, a close above 1213 is going to activate the fractal in price that basically projects the market into that 1257 to 1300 regions that we have now as potential targets and resistance levels. The action today is extremely bullish, as we have a major key reversal day and possibly week developing for the metal after the most bearish weekend that we've had in announcements and basically what I call propaganda. Let's take a look at the silver market here for a minute. And what we see here in the silver market is pretty much the same kind of reaction that on Friday. Market came down into a low of 1540, not basically quite making the low or breaking the previous low that we made on 1170, but on Sunday night the market made a new low of 1415 for the price of silver, which is, in my opinion, completely ridiculous, completely out of whack, completely out of its mean for the real value of silver based on its fundamentals and based on the cost of production. And what you saw here was the expected reaction that basically when we published the report on Friday, the codes, let's see what the codes we're anticipating here. Obviously, when we published the report, the algorithms were expecting a correction, if the market, by the fact that the market closed below 1580, closing at 1536 on Friday, it confirmed that we had a little bit of a bearish momentum coming in. But if it was to come down to that 1492 to 1447, it told you to buy long on a weekly reversal. And in fact, if we take a look at the price, it's come down to a low of 1415. It picked up the buy one at 1492 and 1447. And the first target, if you bought it here, was 1580, which was triggered. And the third target of 1624 was triggered as well, which is basically the sell one level. And it looks like with this kind of move, market is up 74 cents as we speak, up 4.81%. It looks like the silver market is putting in a major key reversal day to the upside as well. The close or the market continues to project 1713 so far as the sell 2 target for silver. And if we close above 1713, then we're looking at prices that are challenging basically the 1920 area as the upper end of the target, and about 1781 to 18 over the near term. This was the expected move that we talked about last week, that we saw happening here. And you know, once this is all said and done, I think that what Elliott analysts will find is that this possibly was the second wave correction, although there may be some arguments as to the market breaking the previous low. But the fact that you see that market breaking the previous low and coming back up with such incredible volume and force, you got to remember that in order for the market to make this kind of a move in a bear market, it takes tremendous amount of buying power to come in. And the only thing I can tell you is that the market identified the bottom of the physical market, where we got major physical buying coming in here, which is the underlying foundation of the paper market. The futures market is based on the cash market and the physical market in gold, the actual physical metal itself, the bullion itself. And I think what you identify here was basically that we saw major buying come in at the low of silver at 1415. With the market experiencing this tremendous rally up 79.80 cents for the day, it looks like once again we are continuing into the upper end of the target of 1713. So it looks like we're headed in the right direction. In terms of JNUG, you can take a look at the market today, basically moving up quite a bit, up about 12-13%, and came right up into this target zone of sell one level of about 412. The second level that the algorithms are indicating is a potentially area to take some profits based on buying it down here, is the 484 level. Closing above the 484, then we got targets, basically the gap that was left open at about 530. In closing above 530, then we're looking at much higher prices here for JNUG. As we pretty much were anticipating previously. The numbers for this week basically indicate that the 416 is the pivot point for the week of the metrics, and the market closing at 340 obviously was a little bit bearish. So a close above 416 is going to negate this this weekly bearish trend. And it's suggesting that if the market does come down to 258 to 175, to go long there. I'm not so sure that we're going to see that developing here, as we have the daily algorithms in the room indicating that 301 was the daily level of support and 282 was the second level of the daily algorithms. And based on what the gold and silver markets are doing here, I think that the market trading above the 373 area, which is the pivot for the day, is very good indication the market is moving up into a bullish mode once again, retracing some of these losses that we saw on Friday, and possibly digesting some of this news regarding the stock basically issue that is going to happen here on December 23rd, the stock split of 10-1 for JNUG. So you want to keep that in mind, and let's see here how this moves up here into this $5.30 to $6 area, at which point I suggest that you consider, if you're in a profit at that point, that maybe taking some profits at those levels. In the meantime, just to reiterate, it looks like the market has digested, has discounted the bearish news that we saw come out over the weekend, and it's basically moving in the direction that we've been anticipating, which is to the upside. I think once again the path of least resistance is to the upside, particularly when you get this kinds of confirmations here that we are getting today for the precious metals, gold and silver, and JNUG. This is Patrick MontesDeOca. I'll keep you posted here as things develop. In the meantime, have a great trading day. Have a great trading week. We'll talk to you later.